Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stone with tonight's Deep Dive. It is May 24th, 2018, and tonight I want to look at corn, the ETF being CORN, not surprisingly. And there's a couple things I want to harp on here. One is that we're back into a trading range as far as a low volatility. And the other thing that I'm going to be talking about is the seasonal tendencies to the market for right now. So just in general terms, it's a volatile, quiet market, and you'll understand what I mean here in just a second, which kind of an unusual condition that's popping up. All of the trends are still pointing to the upside. The technicals in general are pointing to the upside, but there's a forewarning, something that's taking place here with the market that I want you to be aware of when it comes to corn from the seasonal perspective, and we're also in a tight support resistance range. So there's a lot going on here. When it comes to the little pro alerts and the pop-ups that we have here that tell us certain things, there's nothing on the horizon here, but I suspect that we're going to start to see certain things here fairly soon. So first, let's take a look at corn. And we had a very interesting day today. We broke above the resistance level, and we quickly came back below it and came back down to another support level. So we broke through resistance, broke back through that same resistance today, and even had enough thrust to come down to a previous level of support. So I talk about the tight support resistance level. It's between these two levels, this magenta line up here and this over here. This one, this 33 is acting as support. This upper one is acting as resistance. And what's so curious about this is that despite this volatility, specifically on this bar, our volatility, meaning our energy level, has come back down and has remained, I should say, for the last couple of days in what would term as a quiet period. So it's quiet volatility. It's kind of an unusual scenario. So that's part of the reason I'm actually looking at this market. So this level right through here, this 33 right here represents the number of dots that appear here. So the more dots you have, the more strength you have. And that level is at 403 and 3/8. So that's key. The systems are long, and they've been long, the market, since the 19th, right around here. After we've saw this little base here. So I'm going to run through a couple of different charts just to give you some perspective on things. First, energy level. The market is quiet. You can see that corn is, of all the markets we have, it is the number 2 market as far as quiet consolidation, despite the volatility that we've been seeing here. And the other thing I'll point out is that corn, when it gets into this low period, this consolidation type phase where it's low volatility, this only happens 3.7% of the time. And so that's a polite way of saying that things just aren't going to last and there's going to be increased volatility. And today's bar, I think, is kind of the precursor to that. So I'm just simply telling you, expect greater volatility in the market. Currently, I just want to show kind of a long-term chart here. This is our underwater volume index chart, and it's a great way to look at historic charts long-term and look to see what the market's been doing. I just want to point out that the 3-year low occurred in late January, which is exactly when our systems went long the market. Just to give you some perspective, Betelgeuse, or Betel is what we call it sometimes, has been long the market since January 19th. So it's got a nice open position profit, but the problem is, I think with this increased volatility and the potential for the breaking of that support level that I was referring to, this system may have to liquidate itself here fairly soon. So I'll just show you what the corn system has been doing. It has not liquidated itself, so it's kind of hard to see, but the Betelgeuse, or Betel, long entry, LE, has been long since the 19th, and it's still long as of right now. In fact, I'll just show you, here is today's action, this weird bar. broke above support, came back down, and is now showing some support to the market from this reference point over here. So I suspect that we're going to see some increased volatility. As far as the major low, we did have another Betelgeuse system that did go long. Of course, it sold off really at the low, and then a few days later we went long again. One of the nice parts of trading systems that systems don't get into the particulars of hitting the exact low and going through the stages. They just simply run numbers. It looked like a good position. It liquidated itself fairly quickly, and since this particular point right here, we do have the corn with a nice little open position profit per contract of around $1,700, and when you normalize it, it's closer to around $7,000 or so when you take into account all the contracts that would be traded in this particular scenario. So what I'm expecting is more increased volatility with this particular bar right through there. The other thing that I want to show you is just coming back to the website. With where we stand now, here's the 7,000, just giving some reference point for the, when we normalize, and we're always talking about a system taking trades, and we always show it in a per contract basis sometimes, and then in other cases when we normalize it against all other markets, position sizing, the open position for all of the contracts that would be traded, you'd be looking at open position profit of $7,000. The soybeans, just looking at the rest of the grains, are doing well, almost 12,500, and about 5,300, if you will, inside of wheat. So the grain markets as a whole have been doing quite well, but I suspect with that volatility that we're going to see some changes in the systems, and so this is why I want to show a seasonal chart for corn to really lay the groundwork for where the market will be heading, or could be heading, I should say. Here is the end of May, the end of this shadow period right here. That's the end of May. And you can see that there's still a little bit of a rally into the middle of June. And as soon as we get into the middle of June, if we're looking at the 5, the 10, or the 15 year seasonal chart, we see the market have a tendency, a strong tendency to really sell off here quite quickly. And so I'm just foreshadowing that even though our system is long, that support resistance has to hold for our system, and if we do get another little bit of a rally, and today's action kind of threw me a little bit. Systems are still long, but still threw me a little bit. I would suspect that if we're able to get a little bit of a rally, it may not last all that long, and we're going to be looking at in the course of the next couple of weeks. It could be when you look at the 5-year chart, you could be looking at maybe a week or so. If you look at the 10-year chart, you could be looking at a couple of weeks. So just beware that there's a change that is brewing, and that you want to heed the warning when it comes to corn. So I'll flip back to corn, just the big picture here. This is the key support that I was referring to at 403 3/8. That is the level that we really need to stay above. If we're able to stop here, even though we had a weird bar here, have the market still reverse and get past this other threshold, which is at 408 1/8. That's where that resistance had been. I think it may be short-lived to the upside. The volatility is low, as I was talking about, so I can easily see increased volatility. The problem with volatility is the volatility going to thrust it to the downside, or is it going to thrust it to the upside? So we only have the one position out there, the one system, and so there's no hedging that's going to be going on there. So we're either going to have the market rally and continue to break through, and have that seasonal charts really kind of push to the upside for the next week, 10 days, 2 weeks, if you will, and then we'd see some type of reversal. But if we break below this threshold right there, then that the seasonal charts could be off by as much as 2 weeks, and that we could see a break to the downside a little bit sooner. So watch your systems, watch your particular trades in themselves, watch our particular trades, see how things kind of play out here. I would expect just increased volatility, and for the most part, there's an opportunity for this trade to go on for a little bit longer, but the clock is ticking. That's the impetus, or that's the upshot of this particular presentation. These support levels and the seasonals to what corn is up to, and we'll see what the systems are able to do in the coming days to see as to whether or not we liquidate our position on the long side, or if we're able to eke out a little more of a profit on a per contract basis, and then hopefully the system will liquidate itself so that when we get into the majority of June, July, and into August, we can be gone with the longs and look at more of the shorts, assuming that the normal seasonal tendencies really start to kick into gear here. So thanks for watching, and we will take a look at another market tomorrow.